Okay, let me break this down. So, stock futures are barely moving even though there's all this chaos with Iran and the Strait of Hormuz? Wait a second. On the surface, this looks like markets are shrugging off geopolitical risk, but personally, I think that's exactly what makes this situation more interesting. Because here's the thing, investors aren't ignoring the danger, they're just pricing in a very specific outcome. And that's what I want to unpack today. Why are traders acting like a potential global crisis is just a minor subplot in this market story? Let's dig in. Alright, so Iran's talking about a deal with Oman to reopen Hormuz, but they're still refusing direct talks with the US until their demands are met. Meanwhile, oil prices just jumped over 5%. Now, if you're new to this, the Strait of Hormuz is this tiny choke point that controls like 20% of the world's oil shipping. So, logically, any disruption there should send shockwaves through the markets. But instead, we are seeing a muted reaction. Why? My take. Markets are betting on two possibilities: either a deal gets done at the last minute, or the situation escalates just enough to keep prices volatile but not enough to trigger a full-blown panic. It's like traders are saying, we've seen this movie before, and we know how the third act plays out. But here's what worries me: what if they're wrong? Then there's the Fed's dilemma. Inflation data is coming up, and the jobs report was weak. So now the central bank is stuck between rising oil prices pushing inflation higher and slowing hiring suggesting the economy's cooling off. What's the right move here? In my opinion, this is the perfect storm for policy paralysis. The Fed loves to talk about data dependence, but when the data is sending mixed signals, that's just code for, we are making this up as we go. And let's be honest, the market's been riding this uncertainty like a wave. Every week jobs report fuels hopes for rate cuts, but then oil jumps and suddenly inflation fears resurface. It's a tug-of-war, and honestly, I'm not sure the Fed has the strength to pull in either direction without breaking something. Oh, and let's not forget the corporate earnings snippets dropped in here. Plug Power stopped jumping after a narrow loss. Riot platforms mining more Bitcoin. These feel like noise compared to the macro drama, but they're telling a story too. Companies exposed to volatile sectors like crypto or hydrogen tech are still getting a pass from investors as long as they show growth. But here's the catch: this only works if the broader market stays confident enough to overlook the red ink. If the Hormuz situation sours or the Fed surprises with a hike, these momentum stocks could get crushed. A detail I find fascinating is how specific pockets of the market are completely detached from the macro risks everyone else is fretting over. Is that genius or denial? Now, stepping back, what's the bigger picture here? Markets are essentially gambling that humanity's worst instincts will somehow result in a risk-off but not too-off scenario. But what this really suggests is a dangerous complacency. We are pricing in de-escalation in the Middle East, a soft economic landing, and endless corporate profit growth, all while ignoring how interconnected these variables are. If one domino falls, like Iran deciding negotiations are pointless, the whole calculus changes. And yet, here we are, asleep at the wheel. So I'll leave you with this: are we witnessing masterful risk management by investors, or have we just collectively decided to ignore the black swans in the room? Let me know your thoughts in the comments, because trust me, this isn't just about stock charts. It's about how we, as a global economy, choose to dance around existential threats until the music stops.